Thank you, Faizan. Good evening, everyone. I thank you for standing by for this slight delay due to some technical issues. I welcome you all to the Q2 FY21 earnings conference call of Salasar Techno Engineering Limited. On the call with me is Mr. Pramod Kala, Chief Financial Officer of the company, and team from Pareto Capital, our IR advisors. Let me start by giving financial performance review. On a consolidated basis, the Q2 FY21 reported revenue stood at 147.6 crores compared to 153.1 crore for the corresponding period in Q2 FY20. The revenue was impacted due to ongoing COVID crisis during the initial months of the first half. However, currently we have returned to the normal levels of production. Even in these dire times, we are trying to achieve our expectations and we foresee favorable demand in future. EBITDA for quarter stood at 15 crores with EBITDA margin of about 10.2%. PAT for the quarter stood at 8.2 crores with a PAT margin of 5.5%. Let me now touch upon the half-yearly performance. The total revenue in H1 FY21 was close to rupees 211 crores compared to rupees 316.7 crores in H1 FY20. EBITDA stood at rupees 19.8 crores and EBITDA margin at 19.4%. PAT stood at 8.4 crores with a PAT margin of 4%. To speak about the segmental revenue contribution in H1 FY21, revenue from manufacturing of steel structures stood at 88% and from EPC power transmission at 9% and EPC railway electrification at 3%. The total debt for the quarter stood at rupees 162.3 crores while the cash in books stood at rupees 8.3 crores. We are glad to share that we received good orders across segments in quarter 2 and till date of quarter 3. Under the manufacturing segments, we have received 2 major orders apart from our regular telecom orders. The first order is from Avada Clean Projects Private Limited for supply of solar module mounting structures for their 300 megawatt power plant at Bikaner. The order value is about rupees 7.4 crores. The second order that we have received is a recurring order under a 2-year supply agreement with American Tower Corporation for supply of towers in 5 refrigerant countries. Under this new export order, we will be supplying telecom towers to Burkina Faso and Nigeria, valuing about $1 million. Under the EPC segment, we have received 4 orders this quarter. For telecom work, we have secured 6 tenders from Prasar Bharati for rupees 13.45 crores for design, supply, erection and testing and commissioning of 100-meter self-supporting steel towers for All India Radio. Under railway electrification segment, we have won EPC orders for railway electrification at Pratapgarh and Jangai stations of Lucknow division, valuing at rupees 10.5 crores for design, supply, erection, testing and commissioning of 25 kilovolt AC single-phase overhead electrification in connection with the yard remodeling. The next order under this segment is from Western Railway, Vadodara, worth rupees 16.7 crores for design, supply, erection, testing and commissioning of 25 kilovolt AC OHE between Dabhoi-Badwali section. We have secured another order under this segment from Northern Railway, New Delhi, worth rupees 6.5 crores for design, supply, erection, testing, commissioning of 25 kilovolts AC single-phase overhead electrification in connection with Raebareli yard remodeling. We are very confident about the opportunities in our focus sectors. The increasing mobile penetration in India is expected to reach 63% in 2025 from 58% in July 2018. 5G rollout next year is likely to attract $30 billion in collective capital expenditure over the period of next 5 years by the top 3 telecom operators in India. The increasing 4G penetration in the country is expected to provide 4G access to almost 80% of India's mobile subscriber base by 2024. All these are expected to provide good business to telecom tower manufacturers like us. We expect favorable demand from the telecom industry in next 4 to 5 years. There is an increased demand for power consumption in the country. Power consumption is estimated to reach up to 1,895 trillion watts in 2022. The current transmission infrastructure and regional power demand supply gap, in line with the growing need for electricity in the country, is expected to provide favorable opportunity to transmission line EPC players like us. Even the 100% railway electrification target of the government has shown some promising orders in the railway electrification segment. We are receiving a good demand of OIC manufacturing under this segment. Current railway capex of 2021 is almost rupees 1.5 lakh crores, and it is expected to grow at a compound annual growth rate of almost 18% for next 8 to 10 years. Lastly, to give an update on the road and railway overbridge segment, the work is ongoing, and we would start seeing cash flow from the segment in FY22. The business is definitely complementary to our existing steel galvanizing business, and we expect a revenue contribution of about 100 crore rupees from the segment next year. Overall, we see good demand in all segments of the business we are present in, and our focus remains on increasing our market share and providing quality product and services to our clients. This is all from my side. I would now ask the moderator to open the floor for question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The first question is from the line of Suraj Srivastav, individual investor. Please go ahead.
Hi, sir. Good evening, and congrats on a good set of numbers. Can you shed some light on the current quantum of the order book as on September 30th?
Okay. On September 30th, if we talk about the EPC order book, we have ongoing projects worth 450 crores, out of which 306 crores is something which is pending as on 30th September. The project on which the work is going on, that's more than 300 crores. That's in the EPC business segment. And for telecom, as such, we have very good demand. And since telecom is an open order book kind of a thing, we have almost like 35 to 40 crores worth of orders for next 3 to 4 months, which are confirmed every month.
Okay. All right, sir. Secondly, any other areas or segments that we are eyeing to enter beyond what you discussed in your opening remarks?
Can you repeat that question? I somehow missed it.
Yeah, I'm asking you, are there any other areas or segments that we are eyeing to enter beyond what you discussed in the opening remarks?
No, as I mentioned, the railway overbridge segment is something which we are working upon. And, the plant is being set up, wherein this is calling for an investment of almost 20 crore rupees. And the work is going on the shed, and the machines have already been ordered. And we are expecting this business to come into production by March, 21. And the revenues will start next year.
And how do we expect the contribution to be from this one, sir, which you just mentioned?
Top line, about 100 crores in FY22. Yeah.
Okay. All right. Also, sir, out of the segments that you cater to, telecoms or railways, where do you see the maximum growth coming from in the coming years? If you had to...
See, right now, telecom is very strong, and so is the railways. There's a lot of demand from railways at the moment, wherein we can take a lot of EPC works as well as the structures we can supply to people who are into similar kind of jobs like us. And telecom is in fact growing at the highest pace at the moment,
Okay.
So the sizes of the towers have become lighter. I mean, because, a lot of engineering and re-engineering is being done every day by the customer as well as on our ends. And, every day we are coming up with new models and better optimized solutions. So though the number of towers are increasing, the tonnage more or less is remaining the same. I mean, though you understand what I'm trying to say? The towers have become lighter, so the number of towers we are selling today is more than what probably we were selling last year or even 6 months before. But somehow the tonnage still remains the same, similar, in the similar range because the weight of the tower has gone down.
Right.
Yeah.
Okay. So, and also the segments that you cater to, are there any government initiatives that are on the corner that will boost sentiments or aid your business?
See, only yesterday, government has announced an incentive for almost 1.5 lakh crores under PLI scheme.
Okay.
And out of which, I think 12,000 crores been earmarked for the telecom sector alone.
Right.
So there's a lot of focus on the telecom sector from the government side as well. And government is trying to promote a lot of Make in India initiatives, which ultimately is going to boost the telecom growth in India.
Right.
So that ultimately is going to benefit companies like us.
Sure, sir. Okay.
Yeah.
Also, can you give me some sense on the opportunities that will be available to us in the 5G segment?
Oh, 5G segment. See, 5G is still a little, little distant reality in the sense that the spectrum is likely to be auctioned probably end of this fiscal or early next year, early next fiscal.
Okay.
And once the 5G is allocated, and if you really want to use 5G in its fullest, I would say fullest capacity, then probably you need a point of connectivity every 100 meters to give you a seamless experience on your mobile phone.
Mm.
So in that sense, there's a huge opportunity lying in front of us in terms of putting, very smart or very lightweight solutions in the coming times. But right now, what's happening is there's a lot of expansion which is being done in 4G sector alone. Because if you see, practically, even if you go 50 kilometers or 100 kilometers out of your city, you're out of 5G you're out of 4G network.
Yeah.
Right. I mean, your data stops working, and you can only talk on 2G network. So right now, the focus, the operators are focused on improving the 4G infrastructure first before they are able to actually roll out 5G. So the 4G itself has created a huge demand of new sites at the moment, which includes a lot of rural areas as well as semi-urban and urban areas also. And after that, once the 5G is rolled out, there will be a lot of demand initially from the urban areas and the metros, wherein the people will be rushing to connect the 5G for the better experience. And to have a better experience in 5G, the points of connectivity are very important, which are going to be much nearer than 4G. Suppose, let's say, in 4G today, there are 2 towers which are 500 meters apart. Probably in 5G, you'll have 3 more towers between them, so that, the distance between the towers is only 100 meters each.
Right.
Now, these towers would be smart poles or lighting poles or the poles on which, the utility poles on which it is not only a 5G pole, but a lot of other things are also there in that, so that it doesn't, it doesn't destroy the aesthetics of the whole landscape.
Sure, sir. Sir, but because you were saying, I just have a question. So let's say the 4G infrastructure which is in place, can that be used for 5G, or it needs to be completely revamped and 5G is a new set of infrastructure that needs to be laid down?
So there'll be a lot of standalone sites as well as there'll be a lot of non-standalone sites. So the infrastructure which is already there will be used as a non-standalone sites on which 4G, 5G and even 2G would be running properly, And at some point in time they'll remove the 4G, they'll remove the 2G and only 4G and 5G would be present.
Okay.
But at the same time there'll be a lot of towers which will be only catering to 5G.
All
So
right.
there'll be both scenarios, standalone sites on which only 5G would be running and there'll be non-standalone sites on which, the existing infrastructure would be used for enhancing 5G infrastructure.
Okay, sir. All right. Fine. So just my last question. What sort of growth on the order book and top line are we expecting for the next year? If you could just give me a guidance on that.
You're saying about FY21, right?
FY21 and maybe FY22, because already we are halfway down.
Yeah. So FY21, we're expecting to cross the numbers of FY20 in spite of, wasting about 1.5 months due to COVID. Right? And next year, we are expecting a growth of almost 15 to 20% on the top line of FY21. For the simple reason that at least 100 crores will be coming from the bridges sector, plus there will be growth in our existing business also.
All right, sir. Okay. Thank you. Happy Diwali and all the very best for the future, sir.
The very same to you and your family also. Thank you.
Thank you so much.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Muskan Chaudhary, individual investor. Please go ahead.
Hi. So my first question is, was there any capex done in the quarter or the first half of the year?
Yeah, as we said, we have already started building the infrastructure for the railway overbridges facility. And we have already done capex of almost 4 crores in this quarter, as well as we have sent advances for the machinery and other things. But the majority of the capex is going to be booked in the month of December and January and February onwards. By fourth quarter we would have booked all the capex, whatever we need to do for this capacity.
Okay. And are there any plans regarding the capex for the next couple of years?
See, the business is very dynamic. Okay. Right now, we feel that we have sufficient capacity to cater to our existing businesses. Apart from any kind of business what we are heading to, we probably don't need to do anything. But suppose, 6 months down the line, after the 5G option, the scenario suddenly changes and there is a huge demand of towers coming up, and we find that we might we need to add up some capacity. Probably it would depend upon that scenario, because every day the business is changing.
Mm-hmm.
So we might do something next year also, depending upon the scenario what we are in.
Okay. And lastly, I would like to ask you, what sort of growth on the total order book and total revenue front are you looking at for the next year?
See, as I told you, this financial year will be probably closing nearer to what we closed last year, or even might surpass these figures in spite of wasting 1.5 months. But next year we are looking at least 20-25% growth.
Okay. Thank you so much, sir.
Thank you, Muskan.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of R. Vedajana, individual investor. Please go ahead.
Yeah, hi sir. Am I audible?
Yes.
Yeah, hi. So on the first question I had was actually on other income. I see an increase from last quarter, last year. What is the nature really of this 1 crore in Q2?
Just a minute, huh? Promoting first. I think Mr. Pramod Kala would answer that question. Just a minute. He's also online with me.
No, sure.
Yeah, this is basically income, national income as per the India as actually whatever investment we have, any increase in the investment value as per the market rate, that is the figure. It is that figure basically. Hello?
Okay. Yeah, am I audible?
Yeah.
Okay, so I want to ask more on this ROB segment. What was the reason for you entering into this segment, and can you shed some more light on, what are the opportunities here? Who are the major players in that sense?
Yeah. See, the railway overbridges segment or the road overbridges segment is basically sort of a lot of synergy between our existing business and this business, in the sense that it is also a steel fabrication, like what we do, fabrication of towers. It's basically a plate and things like those. And as you're seeing, there's a lot of infrastructure growth happening in our country. For every flyover which they are making today, you need a structure on which the span is going to be resting. So if you see, if you're traveling on a road, or even if you're traveling in your local highway in Mumbai, you'll see a lot of flyovers which are now resting on top of steel structures. And these are the structures which we're going to manufacture. There's a lot of investment which is going to be done by the government in increasing the highways.
Sir, this is the operator. Sorry to interrupt you. Mr. Pramod Kala, please self-mute your line, sir. There is an echo coming from your line, sir.
Is it okay now?
Yes, sir. Now it is better. Thank you.
Oh, sorry. So I was saying there's a lot of investment coming in from the government on development of infrastructure, especially highways. And for every highway, there'll be a flyover. There'll be few flyovers every few kilometers, or maybe, right? And every flyover is going to need some structure on which it is going to rest. So these are the exact structures we're going to manufacture.
Okay. And could you give me some light on who are the competitors in this space?
There are some competitors in organized sector, and there are some in unorganized sector also. In organized sector, probably Jindal also does that, Jindal Steel, at their Odisha plant. And there are few companies in Calcutta which they do this. And in North, there's no major player. And since there's a lot of development on roads happening in North alone, and seeing the cost of freight in transporting these structures, we have an edge in terms of giving a better value to the customer.
Okay. Just my final question was on this EPC business. Why are we entering into it? Why not focusing just on manufacturing when we're getting our working capital, we get stuck in this segment?
See, EPC business is also a complementary business to our manufacturing. We take EPC projects only where our own manufactured goods are used, apart from few goods which we have to buy from the market, right? So, like power transmission lines. So let's say it's a project of 100 crores, so almost 60% of that would be the structures which are being manufactured by us. Or even railway OHE work, the railway overhead electrification work. It complements our manufacturing capacity because we are already manufacturing railway overhead structures, and the same structures are used in that EPC business. And for example, for 100 crore of EPC business or for railway OHE, probably 40-45 crores worth of structures will be supplied by us internally.
Okay.
So that is precisely the reason. Even for telecom, wherever we do a turnkey job, it's because we are selling towers there.
Right. Okay, yeah, that was all. Thank you for your time.
Thank you. Thank you.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and one. Participants, to ask a question, you may press star and one. As there are no further questions from the participants, I would now like to hand the conference over to Mr. Agarwal for closing comments.
Okay, then if there are no more questions, then I would like to thank everyone for your participation in Q2 FY21 earnings call. And in case of any further queries, you may get in touch with Pareto Capital Advisors, or feel free to get in touch with us. We look forward to interacting with you all next quarter. And I would like to wish each one of you, your families, and near and dear, a very happy Dhanteras and a very happy Diwali. Thank you.
Sorry to interrupt you, sir. We have one question in the queue.
Yeah, okay.
From the line of Kalpesh Koti from Valentis Advisors. Please go ahead.
Yes, Kalpesh.
Yeah, hi.
Hello.
Hi, sir. Sir, I want to know a bit update on the, what's the situation, about the worker and the data side.
On the?
Data side. Yeah, payment.
Working capital side.
Yeah, working capital side and the worker side. Worker side plant.
Workers at plant and working capital.
Yeah.
So, workers and plant, we are almost back to normal. Luckily for us, we did not have too much of migrant labor, and we had lot of labor which was from around the factory area only. And, we've been able to gather them back, and everyone is safe and, working. With all the precautions, whatever needs to be taken for COVID-related matters, all these precautions are being taken, and, everyone is working. We are working like a normal work schedule, what we do in both the shifts. And as far as the working capital cycle is concerned, we are at more or less similar level as our last quarter or even last year. Yeah, it has not increased. Yeah.
Okay. So was the we see in the there's a reduction in the fixed cost. So do we see the similar kind of fixed cost reduction we may see in second half?
Fixed cost reduction. You're saying that
Cost cutting.
Cost cutting.
Yeah, the one thing employee costs gone down.
No, see, employee cost has gone down because there was no work in the first 1.5 months, and people were not coming to the factory, and all the labor, which was, we probably paid them over 30-40% of whatever was agreed between the management and the labor, and even the management, the staff, everyone took a cut, for that 1.5 months, almost 2 months. But and also the finance cost has actually come down because the rate of interest has come down. We are at sub-9 level. So the finance cost probably, which was almost 20 crores last year, we will be reducing it by 3.75 to 4 this year. So we will be ending the year with a finance cost of almost 15.5 crores. So that's a substantial reduction we have in the cost.
Okay.
Yeah.
Okay. So, since when we, in your commentary, you said about, the a lot of telecom orders we got, and for the per month, there is a many confirmation order of 30 to 40 crores in telecom sides. Since when we seen the traction in telecom sector?
The telecom sector every month is giving surprises, in the sense that every month at the moment, for last, at least it's happening for last 15 months, every month there is more demand than the last month.
Okay. So do we see it will remain a robust?
Yeah, I mean, at least for next 1.5 to 2 years, it's going to be like this only, as this is what I feel personally. Because what's happening is, I mean, if you see the whole ecosystem of telecom, Reliance Jio has actually spent a lot of money in creating the infrastructure during last 2-3 years, whereas Airtel and Vodafone did not really spend too much of money in modernizing their infrastructure. Okay. Now what has happened is that to gain more market share, Airtel has become very, very aggressive. The maximum demand at the moment has come from Airtel. And that demand, whether it is with Indus Towers or American Towers or Airtel directly, is coming to the market, to us, converting that demand into orders. There is a very huge demand of towers, telecom towers at the moment.
Okay. Any update on the smart cities, smart towers?
The smart cities are going on. Okay. And there's not that much traction as it was expected to be. Things are a bit slow there because there's a lot of confusion between the smart city authorities and local municipal authorities and how the whole thing has to be done, plus all the complicated systems of the old cities. So it's easier to create a new smart city rather than to convert an old city into a smart city.
Understood.
So a lot of things are happening, but at the same time, there are a lot of confusions also among the authorities. So it's not happened the way actually it was supposed to have happened, 3 years ago. What we were expecting that, next 2-3 years we'll be having good volumes of smart cities, that has not actually happened.
Okay.
Yeah.
Sir. Thank you. Thank you, sir.
Thank you, Kamlesh.
Yes.
Thank you. Ladies and gentlemen, on behalf of Salasar Techno Engineering Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you. Thank you, Faizan.